Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical support and demand area for this market. In fact, from here, all this previous move to the upside was created. Again, here, the market tested its zone and rejected it to the upside. And we can see how the market just tested again the exact same zone, already started rejecting it to the upside. And in a situation like this, we could expect more bullish continuation to be created away from this area. So from a monthly standpoint, everything seems very bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how the market is currently approaching the previous level of weekly resistance, which is now turned support here. In fact, if we look closer, we can see how we had a clear impulse to the upside followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse candle. And if we do that, we can see how we have the 50% and 0.382 Fibonacci retracements lining up exactly with this previous level of weekly resistance from which all these previous rejections to the downside were created, which is now turned support at this zone. So what we could expect here is a potential rejection to the upside away from this confluence of support zone, because what we know is that if we have multiple support areas lining up in the same area of price, that creates a confluence of support zone inside of which we could expect to see more institutional longing, which in turn would further increase the probabilities of a potential rejection to the upside away from this level. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, what we can easily notice is that in creating this move to the downside, the market has also created this M pattern here. And as explained many times, after the creation of an M pattern, what we could expect is a rejection to the upside for the completion of the M pattern at the neckline. And in fact, I did speak about AUDUSD just a few days ago, explaining all the reasons for which we could expect first the creation and then completion of this M pattern at the neckline, which is in fact exactly what the market just did. And I also spoke about AUDUSD a couple of times in the past when the market was here, explaining all the reasons for which we could expect this impulse to the upside. And then again, after this impulse and correction, from here, why we could expect the creation of this new daily higher high. And again, that is exactly what the market did. And I will link in description all these previous analysis so you can go and check them out for more free education. So at the moment, what do we have from a technical perspective and where we could be looking for the next potential move? Now, first of all, before we continue with our analysis from a technical perspective here on the daily time frame, let's first go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds, so the big players in the market are doing. Now, if we check the data for the AUD, we can see how with the last reports, net positions have been growing. We went from having minus 96.9k net positions all the way up to having minus 71.2k net positions, showing a strong increase of the net positions. Now, this means that essentially institutions are moving back to the bullish side for the AUD, meaning that actually they're moving back to the bullish side for AUDUSD, because always keep in mind that all currencies on the spot are traded against the USD. So if you are checking the data for AUD, you're actually already checking AUDUSD. And what we can see clearly, as we have just noticed, is that institutions are moving back to the bullish side for this market, meaning that AUDUSD is getting quite bullish. Now, this means that we could expect more bullish continuation away from this area. However, we must notice how at the moment the market is still below a quite strong level of previous daily support turn resistance here. Now, until the market will remain below this previous support turn resistance, it can easily be rejected to the downside. So what is very important to wait for is to wait for a potential break above this resistance zone, because only if we will see the break, only at that point this previous resistance would become support. And after a break on the retest of the previous resistance turn support, this is where we would have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break to the upside on the retest, how I could be approaching a potential move higher. Now, just to be very clear, until the market remains below this level, it can easily be rejected to the downside. However, if we get this break on the retest, how I could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as I would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.